Hey Hoang, Zoran is back. How are you guys doing? I guess you can hear me okay, and if you can see my screen, let me know. How are you guys? Welcome, welcome. Good to see everyone back again on this session. Thank you there, Zoran. Thank you. We'll give it a minute or two before we get started. Today we are going through part 4 of 4, completing the series in trade management. Today we're talking about the trailing stop loss techniques. So while we wait that 1-2 minutes, do you use trailing stop loss? Let me know. Do you use the trailing stop loss with your trades? Fantastic. Automatic or manual? Automatic or manual stop? Okay, good. I hope you mean trailing stop in when it's moving with you, not trailing stop when it's moving against you. Hey Yang, hey Maxime, hey Leisha, how are you all doing? Very good, Stefan. I'm happy to see you all again. Hey Maxime. Oh, see you all, I mean, see your names, right? It'd be good if one day we can turn on all, get all the videos on, we can check everyone out. All right, so give it that 2 minutes. Let's get started. Again, welcome everyone. Today we are going through part 4 for completing the series in the trade management series of videos. Today we are talking about the trailing stop loss techniques. So a couple of things there to share with you. Again, remember, if you have any questions regarding to trading or with the slides that I'm going through or the information that I'm sharing with you, please feel free to let me know immediately. Right? Don't wait for me to pause or to ask for questions. You can let me know straight away. I'll check out the chat as it happens, and then I'll address your questions as it comes along. So like we did before the start of the session, I was asking, do you use trailing stop losses? Do you apply it? And hopefully when your trade is in profit, not moving your stop loss when it's in a loss. I see that some of you do use trailing stop loss in profits or when it's moving with you. That's very good. There are different kinds of trailing stop losses to use, the automatic ones and also the slightly more manual ones. Today, what I'll be sharing with you is the techniques on how to use it in terms of a more manual method. All right. So again, welcome. Let's get started. Quick disclaimer before we move on. Any information, context, opinions shared in this presentation and the following slides are solely those of the presenter, myself, and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. What it all means is that I will be sharing with you some thoughts, some ideas, some opinions of how I would use trailing stop losses. I will share with you the way I use it. I might actually, if time permits, look into some trade ideas and how I would enter a trade, how I apply a stop loss and the potential trailing stop loss levels that I'll be following. If you do jump into any trades, make sure you do your own analysis, make sure you do your own due diligence, check your leverage, check your margin, make sure you don't overtrade or over leverage on your accounts, because that will be the biggest killer to any trading account. All right. So with that, quick, oh, where was my slide on? Okay, I lost my slide on the quick introduction. But as you all know, I am one. Oh, here you go. Introducing the team here. I'm not sure you all know Desmond. We have Cassandra. I'm Jin, right? One of the prop traders here to help you with sharing on my trading journey and to help you with your trading journey as well. So please make use of the information I'm sharing, of my experience and my chart experience especially. Ask me any questions that you might have. I'll be happy to help you along. Quite a couple of things to get through today, right? Again, I'll do a quick recap on the series that we've just gone through, the anatomy of a trade. And then we'll get to when do you use a trailing stop loss, different trailing stop loss techniques. And then I'll show you a couple of examples of trailing stop losses. Okay. What is a prop trader? A prop trader is where we actually have our own trading desk. We're one of the traders here, so we do our own trades for the company. So that's prop trader. Okay. So first things, for those of you who have, if you haven't already, go check out all the videos after this session. Don't go check it out now, but go check out all the videos on the YouTube channel. We've gone through 3 already. This is the 4th one. In those previous 3, let me find my thing here. We've gone through the way to look at entry and stop losses and take profits, the standard way everyone thinks about. And then the next part of it, we look at the break even, how to move your take profit, your stop loss levels to break even, the partial profit levels, idea invalidation, we move our take profit towards a break even, right? Break even and partial profits, we move stop loss towards those levels. And today we're talking about the trailing stop. The main thing to pay attention to in every, before you get into any trade, and I like to constantly remind everyone about, is a quick recap on applying the take profit and stop loss levels. All right, quick recap. Always remember, stop loss is beyond, take profit is before. All right, it could be beyond your resistance, I'll just put an R there, or beyond your support level, depending on whether you're buying or selling. And your take profit should be before your resistance if you are buying, and before your support if you are selling. Okay, so always remember, take profit before a support or before a resistance, stop loss beyond. Why so? Is because stop loss beyond is very important, because that resistance level acts as an additional barrier, right? As an additional barrier, another protection, so that you know that, hey, price, we don't expect price to break above that level, right? We don't expect price to break above. It'll come there, come back down, come there, come back down. If it does break above and hit your stop loss, then we know that it is more likely to move towards upside rather than have a fake break and turn back down. So always tell everyone, stop loss beyond, take profit before. Sometimes retail traders will tend to have maybe an entry. So looking at this, they'll have a point there and they're looking to buy, right? Then to apply a stop loss at the bottom here and a take profit there, it might not look very good in terms of a risk to reward ratio. And what some retail traders might do is to end up putting their stop loss nearer, right? They put their stop loss nearer. So instead of beyond the support, they actually put it right before. And what happens is the trade comes down, hits a stop, bounces up towards the resistance level. All right. So you always want it below that support level, right? What happens if you come to this situation where, let me take that away. What happens if you come to that situation where, you enter a buy, take that away, and it doesn't look great. Or you want to enter a buy and it doesn't look great in terms of a risk to reward, then 2 thoughts: either don't enter it, it's not a perfect setup, it's not a great setup, don't enter it because it's not working well in terms of risk to reward, or size it down, or to actually wait it out. Let's see what happens. Maybe it comes back down again, then you could be looking to buy there, better risk to reward towards upside, or let it come back down, bounce back up, and find the entry there. Okay, so I always want to make sure the trade fits to my stop loss and take profit levels first before I even consider that trade entry. All right, so that's a quick recap in terms of take profit and stop loss levels. Any questions so far? Not yet. And those of you who are joining us, welcome. Or join us slightly later now, welcome again. Please let me know if you have any questions as we go through the slides. Okay, so to the main feature, coming down to the trailing stop losses, right? What is a trailing stop loss? It's basically an order type that's designed to lock in profits or to limit losses as the trade moves favorably. Okay, a lot of times what happens is that you enter a trade. I'll scribble on this now. You can see that if you said, I want to buy at this point, right? And price goes up this way, you might have a take profit very high up. And we all know that price never moves in a straight line, right? In fact, price is going to zigzag. In fact, price is always going to move in this kind of format, right? Sometimes through a big downside and then push up again. It might not always hit your take profit level. It might actually come very close before turning back down again, depending on possibly news or big high volatility events. This is where you want to start considering applying a trailing stop loss, right? Typically, there are, if you're using MT4, there is an automatic trailing stop loss where you just apply it onto your trade and it says maybe 15 pips or 20 pips or 30 pips away from the current price. So as price moves up, so in this case, where stop loss moves according as price moves favorably. So you might have price at this point, right? And your stop loss might be below there. It will maintain that distance. It will maintain that distance. So if price moves up by an equivalent amount, moves up to that point, your stop loss would also move up by that same level, right? So you move up by that same amount, the stop loss will move up as well. And you just keep moving up. So long as price keeps moving up, your stop loss will keep shifting along with it. The moment that price turns back down and hits your stop loss, it will close you out of the trade. All right, so automatic trailing stop loss has its benefits. All right, one of the benefits is that it's constantly moving according to price as it moves favorably. Right, it could move up and your stop loss so just keep shifting. You can keep it quite tight as well. If you see price trending very strongly, for example, towards upside, you could keep a very tight trailing stop loss so that you maximize on the trade. Right, it could go all the way up. You have a very tight trailing stop. Price, the stop loss will keep shifting towards the upside, following the price, following below the price. The cons, the bad side to an automatic trailing stop loss is that it gives very little space for price fluctuation, right? Because we know that price doesn't move in a straight line format, all right? If you have your automatic trailing stop loss too tight, right, what happens is that price moves up, your stop loss follows. The next moment it spikes down and shoots back up again. You get stopped out in a profit, but then you missed out on that potential upside again. So the good thing about automatic trailing stop losses is that as price moves up, your stop loss will continue moving up. It's good in a very tight trending scenario or strong trending scenario where you see little fluctuations towards the downside. The risk is that traders tend to put it a little bit too tightly, right? Too tightly. What I would suggest is that your trailing stop loss should not be less than 30 pips, right? I generally don't like to give fixed numbers, but as a ballpark number, your automatic trailing stop loss should not be less than 30 pips because it gives you a bit of a volatility, a bit of a chance for price to fluctuate from the current level and the stop loss level. Okay, and also given that it shouldn't be less than 30 pips, that also tells you a bit of when you should consider applying a trailing stop loss. You don't want to apply a trailing stop loss straight away whenever you see a price move in your favor, because usually that's going to you might end up applying it too tightly you get stopped out before it gets a chance to move towards your take profit level. Okay, so what you're going to do is make sure that you're already more or less significantly in profit, more than 30 pips, 40, 50 pips in already. Then you apply a 30 pip, at least a 30 pip trailing stop loss, so that price will move. And then you give it a space to move along with the price movements and the stop loss. Okay, so that's a good way. The automatic trailing stop loss is a good way to have a method, apply something, but you have a lot less control, right? You have a lot less control. Once you set it, it's either it fluctuates and hits you out, or you decide to close it. You don't get a lot of control over a automatic trailing stop loss. Alternatively, what we'll focus on a lot more today is the manual trailing stop loss. All right, a manual trailing stop loss, could consider it as a shifting of the stop loss. We're moving the stop loss levels based on mechanical indicators or mechanical signals or levels. All right, so based on different things that tells us, hey, if price goes past this point, it's going to go lower, we can move our stop loss to that indicator level or to that price level because it's going to be protected. Okay, so I would prefer comparing the automatic and the manual. I would prefer looking at to focus on the manual trailing stop loss because that gives us a lot more predictability. We know why we're moving price or stop loss towards that price level. We know why we want to close or why we would have closed out a trade at that level rather than being stopped out possibly because of a price volatility. Make sense so far to everyone? Fantastic. Thanks for that, Zoran. Okay, so just to share with you, talking about mechanical methods to apply a stop loss, here are a couple. Can you actually tell me which ones are these? So what's this one? The first one here. What's the first one here? Applying a stop loss based on? It starts with M. Second word, A. Moving average. Fantastic. Thanks for that. Right? So the first one, applying a stop loss based on moving average. The second one, it starts with P. Come on, everyone has to participate. I see everyone else here. Parabolic SAR. PASAR. Yes, very good. Okay, the third one, the answer's there already, is the ATR. Right? The fourth one, those lines there. It could be Fibonacci, very good. It could be Fibonacci, but it is also, as much as it's Fibonacci, you can also be looking at your support resistance level, or we can call it also Fib levels, right? I tend to realize that Fib levels and your support levels do tend to coincide. So yes, Fib or support levels. And the fifth one, a little bit more tricky. Fifth one here, what is it? Nope, not the RSI. Not super trend. Very tricky ones. Okay, I don't think you get this one. This one is the Chandelier, right? Which I'll tell you about. Chandelier. I can't spell it, but yeah, there it is. Okay, I'll tell you about that as we go through the slides later. But these are the five, for not limited to these five. You could have, these are the five that I'll be talking about, but you could use other methods, other indicators. You guys are sharing about the RSI, you guys are sharing about Fib levels, super trend, or anything that you use. So long as it makes sense, you can use it as a mechanical method to tell you where to move your stop loss to, or when to move your stop loss. Okay, so here's an example as we go through that. Let's say based on this, we got a diagonal trend line towards the upside. It's breaking that, not just the diagonal trend line, but also the horizontal trend, the horizontal support level. So we're looking at a sell entry at that point. Okay, so if you sold there, what would happen? Selling there, you might have a stop loss above there, take profit. Let's say first take profit might be there, and then you might be thinking, whether can I move it lower after that? When you move your first take profit would have been there, you would have come very close. What tends to happen is that people will start looking to could move their take profit lower. But as you move your take profit lower, you also want to secure your stop loss or secure your downside. So you want to move, you can see here our stop loss level there. So we would have moved stop loss down as well. So this was the initial, right? As you move your take profit lower, you might want to move that, you would want to move that stop loss lower as well. Moving that stop loss lower, now what we're talking about is the moving average trailing stop, right? The moving average trailing stop. You could be actually moving your stop loss lower according to the moving average, right? Moving it according to the moving average. I wouldn't move it too often. I wouldn't move it too often. I'll look for it to break levels, then I start moving the stop loss as well. Okay, so for example, in this case, this is a key level there, right? And another key level there. Then you start moving your stop loss from this point as it comes down, as it breaks, it comes nearer towards your take profit, your initial take profit. Then I'll move that stop loss towards that point, right? So I'm gonna move it just above that moving average. As it comes down, you might have moved your take profit lower already. So let's move that away, right? Let's say you move your take profit towards that 1.5 level. So it's way down there, right? So you move your stop loss down. Again, as it breaks below this point here, you'd say, okay, now that it's broken below this point, I'm going to move my stop loss lower again. Okay, so there's a stop loss entry, stop loss there, move it lower, and then you keep moving it lower. And then as it breaks another level, in this case, maybe that 1.54 level there, right? As it breaks down, you move your stop loss lower again, keeping it to that moving average level, right? So you move it down and then down again as it breaks below 1.53, you move your stop loss towards that moving average there. And then the moment it hits and bounces, it didn't hit your take profit. This is your take profit here. Didn't hit your take profit, but it bounces strongly towards the upside. It would have closed you out at that stop loss along the moving average. Make sense so far? So in this case, you have to move your stop loss a couple of times according to or following that moving average line. In this case, I would have my moving average based on a 50 moving average, 50 SMA. Right, so I can see that I'll be moving that trade as not at random. So I wouldn't keep moving it down every time the moving average moves lower. I'll move it down every time there's a key level. I'll move it down to the next level. I'll move it down again. I'll move it down again. Make sense? So you can see that this, if you kept your stop loss at that point, so just to clean it up a little bit, taking all that away, if you kept your stop loss up there, and you didn't apply, you had just that there, then you've just gone down and hit your take profit, you'll be out. But you could see all that volatility in between, right? You could see all that volatility in between. If you actually move your take profit all the way down, right, and had your stop loss there, it would be very good. You can see that in this case, it would be very good risk to reward ratio, but it doesn't hit your take profit. It might go up, it might go all the way back up, and then before you know it, what a trade that could have been a very good from 1.5789 towards 1.53, good 400 pip move towards the downside gets reversed completely, and then you end up with nothing, right? So that moving of the stop loss now towards that moving average helps you secure that big reversal, potential big reversal towards the upside. Okay, and this is what happened. It broke up and it reversed all the way back up. Would have missed out on all if you didn't close out at that moving average level. We've gone back up towards 1.57. We've reversed all that. Very good trade towards the downside. Okay. Makes sense so far. So this is one reason, or this is a very key reason why you want to have you want to move your stop loss down, especially or in particularly when your trade is doing well, it's moving in profit. You want to try and maximize on that move. You're going to move your stop. You're going to move your take profit lower. You want to move that stop loss according with it, moving lower, so that we all know that in the event price shoots up, you're not going to lose out on that trade. You're not going to lose out all the good trading there. You're going to try and secure your profits. Make sense so far? Have I lost everyone? Okay, good. So that's applying the moving average to applying your stop loss to a moving average, right? It gets you up before that big moves happens. Another way to think about applying a trailing stop loss is when you have that trend line, when you use the trend line. Okay, so again, same thing based on the same example. We entered a sell there, stop loss up there, take profit way down at a 1.5 level. You can see that once it breaks, so you can have that trend line again. Your stop loss will follow just above that trend line. You apply a stop loss just above that trend line. And once price breaks over that trend line, you get stopped out. Again, we all know that if price breaks above a trend line or if it breaks above a resistance level, more likely we're going to see it continue strongly towards the upside because it's breaking a resistance, right? Once it breaks above, we're likely to see it push quite strongly towards the upside. So you can apply either based on a moving average or based on a trend line, either towards the downside or the upside as well. Okay, so this is quite straightforward here. The next one, which I like a lot, is the parabolic SAR, parabolic stop and reversal trailing stop loss. Okay, as the indicator tells you, as the name of the indicator tells you, is the stop and reverse. It's a stop and reverse. What that means is once price hits those dots, you see these dots here, tells you somewhat of the momentum of price, right? The further away it is from price, the stronger the downward move, right? The further away, the stronger the downward move. You can see this move towards upside. Price came very close to that dot. It was indicating a potential stop moving down and reverse towards upside. But then it gained that distance again as price dropped strongly. Very big distance between price and the PSAR. And then after that, price came up, hit. So you can imagine that the dot was right there. Price hit the PSAR, appeared below the candle, and then that shows us the momentum of price has changed from moving down towards moving toward upside. Okay, so because of that, what you can also do is apply your trailing stop loss based on the parabolic SAR, the PSAR. So again, similar to the moving average, similar to the trend line, you're applying the stop loss just above that PSAR, right? So in this case, your stop loss will be up there. As price comes down, hits, and pushes up, you would have closed out at that trade there as price touches that PSAR to push towards the upside. Okay, what you realize here, or what you should realize here, is that it's all quite similar. The price levels that we end up closing at on the moving average, scroll back, moving average is about 1.5465, 1.5465. The trend line is about that level between 1.54 and 1.55, so it's about that level as well. The PSAR slightly earlier at 1.54, just about 1.54. And then the Chandelier or the ATR is also about that 1.54 level. So main thing to pay attention to here is that, so long as you have a somewhat of a mechanical level to identify, where to move your trailing stop to, what you should come to realize is that it doesn't have that big a difference. It doesn't have that big a difference. It's really around that area of 1.54, right? 1.54, slightly higher, thereabouts. Some indicators in terms of the Chandelier now, you can see it is actually one of the indicators that you can apply. I'll show it to you on TradingView later, that you can apply that shows you, that potential reversal as well. Gets you at about just slightly below that 1.54 level. The ATR gets you slightly above, or giving you that relatively same level to get out at that point there. Okay, so main thing here is to know when to apply a trailing stop. As you see price moving down, you have your take profit. You want to move your take profit lower, or you have a big take profit towards the downside. As it breaks levels, you want to move your stop loss lower. You can move your stop loss lower according to the moving average. You can move it according to, the PSAR trend lines, or even support resistance levels or fib levels, and also the ATR or the Chandelier stop levels. Okay, so I'll show you an example here. Let's jump to TradingView. I've got the New Zealand dollar as a moving average example, and also the US CAD, and then we'll get into some other examples as we go through the charts as well. Any questions at this point, everyone? All right, when moving manually, how often to move the stop loss? How often? I would say do it based on the levels that it's breaking or that it's reaching. Okay, so I'll show you here. So this is the New Zealand dollar example I was just sharing with you. I wouldn't do it right on the candle, so I'll show you here. Okay, again, as an example, we've got that upward trend line, right, based on this level here and this level here. Move that down a little bit, okay? And then we see that price has broken that trend line, right? So as price breaks that level, let's say at that point there, what about sell entry, right? We know our resistance level is about there, or that 0.6312 level. Our stop loss could be just beyond that resistance level. Okay, take profit will be at that point because we haven't seen anything here. We would be trading based on this view. Okay, so we have a take profit there. As we enter and price goes down, right? As price goes down, what you'll be looking for is levels to move your stop loss, right? As Zoran's asking, when to move your stop loss level down. You say that, okay, once it comes to this point, right? Because I know that it comes here, it bounces off. This would be a level there. Another one I would say would be about that point there as it bounces as a key level there. So I'll move, in this case, as price comes down, right? As price comes down and it breaks below this point, I might start considering to move my stop loss, in this case, down towards break even first, right? Because we don't know what's happening here. I'll say, okay, it's moved down. Can I secure this trade? In the worst case scenario, I've got a break even trade. All right, I've got a break even trade. So it bounces, comes back up, comes back down, comes back up, comes back down. So now that it's broken this level strongly, right? It's broken this level strongly. It comes down this way. Then I would say, okay, now that this level is done, I'll move that stop loss down towards that moving average because it's broken this level already, right? It's broken this level, bounces back up as it breaks down again, right? Then, or even if it breaks down towards this point, I'll move my stop loss down just beyond this moving average here, right? I would never put it right on the moving average because you want to give a bit of space for volatility. So I'll just move it just before the moving average. Moving average here will be on the 50 MA. So you can see here, the 50 moving average. Okay, so I'll move it just before it bounces back up. As it comes down, right? Let's say that your take profit is not here. You would have moved your take profit lower, maybe below that 0.6 as an example here. Then you say, okay, it comes down, bounces back up. We can move our stop loss again towards below, above that level, above that moving average there. It comes down, doesn't hit our take profit, bounces back up. By that time, as it breaks lower, as it breaks below this point, right? As it breaks below this level again, would have moved our take profit towards that moving average again, all right? So once it comes back up, it would have closed us out as we either have it at that point or just at that moving average. So this is how I would move our stop loss as it breaks below. First was that level and then that level. So as it breaks below key levels, we moved our stop loss, right, from up here. As it comes down once, we move it to break even to secure that trade. Okay, and then it moves down again, do one more time, and then one more time, and then one more time, and then it bounces up. Okay, when you set up the trade at, let's say, H4, you monitor and move the trailing stop on that time frame. You don't go into lower time frames. No, yeah, I agree with you, Zoran. The way I would approach a trade is that if I enter a trade based on an H4, then I'm always going to look at a trade on an H4 time frame only. I wouldn't look at it on a smaller time frame. If anything, I would only look at it to the bigger time frame. I'll look at it on the daily. I wouldn't look at it on the smaller, right? Because when you're looking at a bigger time frame, when you look at it smaller, then it might get a little bit confusing, or you might get caught up in terms of that short-term volatility. All right, so you'd move your trailing stop based on the H4. Answer your question there? Yeah, it will tend to get, if you're looking at it on H4 here, let's say, for example, this is a New Zealand dollar on the H4 time frame here. At this point, if you looked at it on the date, on the H1, at that point, this shows you a very clear consolidation. Shows you a very clear consolidation here. But if you looked at it on the H1 time frame, then it could have looked like a very strong or potentially very strong break towards the downside, especially if it looked like it was breaking below that moving average. We think, oh wait, price is crossing below moving average. Can I look to sell this down? All right, so it does tend to get a bit more, straightforward if you look at it on the H4 time frame. Okay, so again, back to the moving of trailing stops, trailing your stop based on the moving average. And also, I like to pair it together with levels, support resistance levels. You would say up there, first one to break even, second one just above that level, third one here, fourth one there as it breaks lower and it bounces back up and close you out. Although it hits your stop loss, it's a stop loss and a profit. All right. Any questions? Okay. If not, then the next one, US CAD. Right? US CAD is actually a an example that is happening right now. Right, an example that's happening right now. Trend line, again, good strong trend line towards the upside. I actually have this trade. As it broke down from that. I think I got in just slightly after that. I got in just below 1.3050. So just after that, about there, right? As it broke that trend line towards the downside, stop loss again above that level, so above that near-term resistance level. I think I had my stop loss just above 1.31. Okay, and then my take profit is down towards that 1.2750 level. Okay, so in this case, like who was asking? Huang was asking about Fibonacci levels. You can also see that if I applied that Fib levels here, okay, same thing, all the levels are in play, 50%, 50% here, 61.8, and 78.6 there. Okay, so at this point, what I'm looking for now is for price to break below that 1.2970 level, right? Because it's 1.2968. If it breaks below that 1.2970, then I could be looking to move my stop loss down to that point, because I'm looking for price to do that, right? Once it breaks below that point, I'll move my stop loss just above that resistance level. Fibonacci resistance level, you can also see that it's a level that's formed here over the last time it resisted or it bounced off on the 30th of August, right? So I'll move my stop loss just above. In fact, what I'll also tell you is that leading up to, even before this, I think after this session, what I'll do is I'll move my stop loss towards break even, right? Because we do have a big news coming up tonight. So I'll move my stop loss towards break even. If the big news is not as expected, we could see further dollar weakness, then we could see that push. So I'll move that towards break even. If it breaks below this point, I'll move it towards just at that, just above that consolidation, right? And then if price does continue lower, if price does go down and continue lower and breaks below that point, which you can see has formed a good support level. It is a 61.8 level. It's bounced off strongly here. If price does break below this point, then I would move my stop loss again, lower again. So every time it breaks that Fib level or that interim resistance or support level, I'll move my stop loss lower again. And then if it comes towards this point, I would move. If it comes towards this point and it breaks lower, then I'll move my stop loss again below this level towards the take profit. In the other scenario, if it does not go down towards my take profit, let's say that it goes down a little bit and then it bounces back up, at least I have my stop loss there protecting me towards that potential big upward move. I've secured some profits there as well. Does that make sense for everyone? So, you can use it based on moving average. You can use it based on support resistance. You can use it based on the PSAR, all different methods to apply that stop loss level, that trailing stop level. One more example. Okay. Actually, no, I'll show you this one. Okay, let's clear that out. I like how that's moved very nicely. Okay, so I've been looking at the euro dollar testing that 1.02 level. Does a trailing stop loss automatic feature work on MT4? Yes, it does. So I don't have MT4 on this platform now, on this computer, on this webinar computer now, but you can actually jump onto apply a trailing stop loss on MT4 as well. So when it's in profit already, you can apply that trailing stop. All right. Oh, for mobile, let me just do a quick check. I do have my mobile here. Let's see. No, I don't think you can apply a trailing stop on mobile. Yeah, there's no trailing stop on mobile. Thanks for that. It's all right. I just verified it as well. Okay. Yes. Typically, what I also suggest to most traders is that you would apply it, best to enter your trades on a desktop. I like trading on a desktop or laptop more than on a mobile. I see more of the charts. I see more of the way price is moving. I'm not sure whether you can apply it on trailing stop on a mobile. Most definitely you can on MT4 on the computer version. Alrighty. So in this scenario, euro dollar pushing towards the upside, right? If it does break above that 1.02 level, most people will be thinking that you could be looking to buy it up, take profit maybe towards that 1.0366 level, right? I don't think there's a big move to apply a trailing stop in this scenario. If you had to, maybe, if you're buying there, let's say you look to buy there, your take profit was there, only, and your stop loss would be maybe just below this point. So stop loss would be about there. Okay, so only if price moves up to about that 1.20278 level, then I'll start thinking about moving my stop loss, towards that point, towards break even first. And if it breaks above, then I could move it towards that next, just beyond that next resistance or support level there. And then after that, most likely, it will shoot up towards take profit or come back down. So it's not a big space. Remember what I told you in the first few slides is you do need that space for price to move before you start considering moving your stop loss, trailing stop losses, right? You don't want to be doing a scalping trade, right? A short-term intraday trade, and then start having to think about moving stop losses along with a quick trade as well, right? So usually what we see with moving stop losses, trailing stop losses, it's when you have a trade running strongly in profit. In another example, in this case, right? So let's look at this case where you can see that price comes up and rejects this level, right? Rejects this level. Then you'd be looking for a selling opportunity, maybe as it rejects that point, right? Your stop loss will be above that resistance level there. Your take profit will be near this level here, right? Towards this near point here. Okay, in this case, again, we didn't expect it to drop all the way. As it comes down, as it breaks below key levels, for example, there, right? It comes down and breaks below the key level there, then I will move my stop loss either towards break even, or in this case, as it breaks below that point, I'll move it just above that moving average, right? As it comes down, let's say that at that point, as it comes down strongly, you didn't have your take profit there, your take profit at thinking that you get to 0.98, then you move, as it comes down, you move your take profit, your stop loss towards the next level along that moving average line. Okay, but again, this is not a great space to trade it down, because I would say that as an example, even as an example, take profit level at that point, you would have moved your take profit, your stop loss once towards break even, twice towards securing that level, and then you would have hit your take profit already. Okay, remember that moving a stop loss can let you try and maximize on a trade, but it should not give you that excuse to be greedy, right? It should not give you the excuse to be greedy, to keep moving your take profit lower and to keep moving your stop loss as well. Because, for example, in this euro dollar scenario, breaking that parity level into that 0.99 level is a key level already. As much as you could move your stop loss low, your take profit lower, and you could have ended up closing out at 1.003. I think that it would still have been better to close out at 0.994 as a key level as it hits that point. All right. So again, another point of warning is that moving your trailing stop loss is an opportunity to maximize on a trade, but should not be an excuse to be greedy, to try and keep moving your stop losses and take profits lower and lower or higher and higher. All right, that's one thing that people would tend to do, and then you end up closing out not at the maximum. And also, if you forget to move your stop loss, but you move your take profit only, and then you start getting caught out as well. So a few things to consider before you start moving your trailing stop losses. Make sure that it's based on a mechanical reason, reasons where you can identify and enter based on those reasons. All right. At this point, any other questions? Super happy with this. Aussie trade shot up as planned. Again, if you were looking at that trade towards upside, then let's say that you entered there, you would have moved, let's say our take profit, we didn't close out at that, you would have moved your take profit higher, and this would be where you move your trailing stop up. Okay, so in this case, last example, we had a buy here. Right, we had our stop loss at this point here. Right, we had our take profit at this point here. Oops. Okay, I'll take this out just to clarify things. So with that, as price broke towards upside, as it broke above that moving average, it comes towards our take profit level. What you could be looking at is, as it broke above 38.2, right? You might be going, okay, now can I move my take profit towards just below that next resistance level, move my stop loss just below that interim support level of 38.2. And now if it does break higher above, strongly above that 61.8 level, not yet, okay, not yet. But if it does break above, say about 60, gets to 69, 69.2, 0.692, then you could move your stop loss above again, right? Based on levels, based on horizontal levels, move your stop loss up again, take profit at that, just below that 0.7. So if we applied the PSAR, where is it? I don't want scripts. Right, so you apply your PSAR, you would have your stop loss just at that point, right? Before it touches or at that dot there, you have your stop loss there. Okay, so you could do this as it trades, as you look for it to trade up towards 0.7. You move your stop loss just at that PSAR or just below that PSAR, at that point, and with price now testing that 61.8 level. All right. So a couple of examples there, and especially a couple of live examples as is happening right now on the Aussie dollar, on the US CAD as well. You know, a couple of things to let you try it out when you start looking at your next trade that's running in profit. You know, you could be looking to move your take profit higher. You could be looking to shift your stop loss, your trailing stop loss. Use it based on mechanical reasons such as moving average, support resistance levels, PSAR, ATR, all of that. You know, Fibonacci levels. You can apply all of that to reasons or to levels where you move your trailing stop towards. With that, any further questions? And will you be looking to apply trailing stop losses to your trades from now on? As we come towards the close of the session, I hope you had a good session. I hope you found this, the information shared with you today, useful. I'm not sure what the next session is going to be, but I'm pretty sure it'd be interesting as well. Thank you, Alicia. You're most welcome. All right, so with that, what I'll leave you with as well is just a quick heads up, is that tonight at 8:30 GMT +8, we do have a big news to be coming up, the US CPI or US inflation data to be released. Everyone is watching this news event. Core CPI looking to stay at a 0.3%. CPI month on month looking to drop slightly to a minus 0.1. My view is that whatever the number is going to be is not going to influence the 75 basis points rate hike to come from the FOMC in the upcoming meeting, but it does have a longer term impact on the overall interest rates, right? So I don't think it'll be something that will change the Fed Reserve immediately, but I think it will have a longer term impact. Overall, I'm looking for potential dollar strength tonight, right? Regardless of what these numbers could be. I think that we could see a dollar strength come back into play, because if you look at the dollar index, it has been dropping quite strongly. It does look like it's dropping leading up to this event, so that it could bounce back up from that 107.91 level, possibly back up towards that 109.45 level. But with all that said, remember, do your own due diligence. Make sure you check your trades, check your leverage. Don't overtrade, don't over leverage. Yep, I agree with you, Trung. Let's look. I'm looking forward to it tonight. Right, so everything seems to be setting up for that. You will possibly end up with a situation where you have too many trades to possibly jump into. So just be extra careful, be extra selective on what trades you're going to get into. All right. Yeah, it looks like it might do that. Might do that. Yep. That seems to be the pattern. All righty. So with that said, trade well, trade safe, watch out for the news. This was very interesting, but I did not know about the last sessions for the series. You can check out, so Yezen, you can check out the YouTube channel. I'm pretty sure it should be uploaded there. If it's not already uploaded, I'll chase them up to make sure that it gets uploaded for you guys. All right. No worries. Okay, so trade well, trade safe. Watch out for the news. Take care now. Bye-bye.